Hey everyone, welcome back to the channel. Today we're going to explore a fascinating setup on one of the biggest names in the entire AI space, and that's NVIDIA. It's sitting right at a breakout level, and this is the kind of chart that gets a lot of traders paying attention. Now, as always, everything in this video is strictly educational. This is not financial advice. I'm not telling you what to buy or sell. We're simply walking through a hypothetical scenario using our favorite animated trader, Juicy Joe, to help demonstrate how a covered call structure works. And stick around until the end. I'll share how you can get access to my free master course as part of the Cash Flow Machine Elite training. Let's jump right in. So here's what's interesting about NVIDIA right now. The stock is forming an early stage base. It's a stage 2 base, which means that it's still relatively constructive compared to stocks that are extended or late stage bases. Most analysts still consider NVIDIA the #1 name in the entire AI ecosystem. So it naturally shows up on leadership lists. Right now, NVIDIA is trading just under 184.50, which is the key breakout level that we're watching. And you'll notice something else. Price is sitting just below the 50-day moving average, and volume has been light. Light volume isn't a bad thing by itself, but it simply tells us that we're consolidating and not surging with conviction. So we still have leadership, an early stage base, a constructive pattern, and an important breakout line overhead. Now, that's exactly the type of chart that Juicy Joe loves to study. Let's break the chart down a little more specifically. There's a breakout line here at 184.50. Anytime a stock rests just under a clear resistance level, traders want to see how it behaves. Does it build pressure? Does it fail? Nobody knows. We're simply observing. And frankly, NVIDIA has tried this level a couple of times before, and it hasn't succeeded. So who knows if now will be the best time? But you don't know until it's probably too late. So you try to get in a little bit early. At least that's what Juicy Joe is thinking right now. Now, its position relative to the 50-day moving average is important to know. Right now, it's just under that line. And if it can reclaim the 50-day and break above resistance with strong volume, that's what a lot of traders consider confirmation. But again, we don't predict, we prepare. Now, there is light volume lately in this move. Now, that shows a bit of indecision. Buyers and sellers are taking a breath. For covered call traders, that can be fine. We're often looking for structure and consistency more than big upside moves. And like I mentioned a minute ago, it's in an early stage base too. Early bases tend to offer more potential runway than late stage ones. Again, this doesn't mean the stock will go up. It simply explains why NVIDIA is still on many radar screens. Now this backup sets the stage for our animated friend Juicy Joe, because today he's exploring the idea of a hypothetical deep in the money call. Okay, so here's Juicy Joe. He's been studying NVIDIA and he wants to use a conservative income-focused approach. He's not trying to swing for the fences. He just wants structure and consistency. Joe sees NVIDIA trading around 184, and he considers buying 100 shares and selling a slightly deep in the money covered call using the 180 strike about 9 days out. Why the 180 strike? Well, Joe likes more downside protection, he likes intrinsic value, and he likes lower dependence on upside movement. He's not trying to predict whether NVIDIA breaks out. He's simply setting up a defined approach with a built-in buffer. And again, this is strictly a hypothetical example to illustrate the mechanics of a covered call. So here's what Juicy Joe looks at in an option chain. We can see the 180 strike price, we can see the bid-ask premium, and the 9-day expiration. Now with a deep in the money strike, most of the premium is what's called intrinsic or in the money, which simply reflects the relationship between the strike price and the stock price. What Joe focuses on and what we emphasize in the cash flow machine is understanding the extrinsic portion. That's what we call the juice. And we'll keep the actual percentage vague here because different traders calculate it differently. And this is an educational demonstration. You can figure that part out on your own. What matters here is that Joe sees a structure that he likes. It's got a defined risk profile, it's got some income potential, it's got clear management rules. He's not guessing direction, he's building process. And of course, there are trade adjustments that have to be made once this position is entered. Joe also thinks through the what ifs. What if NVIDIA breaks out? Great. His shares may be called away, but he still collected the premium. What if NVIDIA pulls back? Well, the deep in the money strike gives him cushion. If the stock falls below key moving averages, Joe can decide whether to roll, adjust, or close based on his rules. What invalidates the setup? A heavy volume sell-off below support or a sharp, unexpected drop? Because Joe always respects risk first. This is what covered call trading is all about: rules, structure, and staying unemotional. So that's Juicy Joe's hypothetical NVIDIA covered call built on chart structure, leadership, and a slightly deep in the money approach for stability. If you enjoy breaking down trades like this and you want to learn how to build consistent, rules-based income strategies, I invite you to check out my Cash Flow Machine Elite course. You can also access my free master course from the link listed below. And drop a comment if you want more Juicy Joe examples, and as always, thanks for watching. I'll see you on the next video. Let me ask you something. Are you tired of losing money in the stock market? Are you tired of watching your portfolio go nowhere while the markets swing up and down? Or maybe you handed your hard-earned money to a financial advisor, hoping they'd help you grow it, only to be disappointed by high fees and underwhelming returns? I get it. I've seen it all. And that's exactly why I created the Cash Flow Machine Elite course, to put the power back in your hands. This isn't just a theory. This is real, in-depth training on how to generate consistent weekly income from your existing portfolio using covered calls, just like the ones you see in my videos, but at a whole other level. Every week, you could be generating hundreds or even thousands of dollars in premium income, enough to easily pay for this course in a matter of weeks. And more importantly, enough to build a life where your money works for you and not the other way around. Let's be clear, this course isn't for everyone. It's not for people looking to get lucky. But if you got a decent sized portfolio and you're ready to stop hoping and start earning, then you owe it to yourself to invest in the knowledge that can change everything. The Elite course is now open. The results speak for themselves. Click on the link below and let's build your cash flow machine together. So I need to put up a legal disclosure here. I am not a financial advisor. This video is for educational purposes only. This is entertainment and it's not financial advice. Always do your own research before making financial decisions, and please be careful.